it's Brian from Keep Trading Simple, and this is our Monday morning market breakdown. So, welcome back. I hope everybody had a great weekend this week, and yeah, we're gonna roll through and kind of see what we can find for this week. We had some big movers. If you guys remember the top three last week, Friday was a pretty nice one. A couple different setups throughout the week. A couple surprise moves last week as well. Definitely some fireworks, even though it's early August. The markets have definitely been very, very interesting to participate in. So hopefully you guys did well. Hopefully nobody ended up in the red last week or anything. And we'll get started here. Let me go down who I am, just for those of you that don't know me, so you kind of get a little bit of a background of why I kind of have the opinions that I do and kind of where I'm coming from. As I mentioned before, I'm the president and CEO of Keep Trading Simple. And my goal, and again, the goal of the company is really to help traders remove the distractions that these so-called professionals are telling you that you need to have. If you keep things simple, people tend to do better, and that's again, I've seen a lot. I've been trading since the tech bubble. I was a financial advisor for a bit with one of the big three. I kind of learned on what happens on the inside. I worked up right next to Wall Street. I used to walk past the New York Stock Exchange every morning for about 2 years, helping traders up in that area learn how to trade. So seen a lot of different things, developed a few different strategies that I really kind of touched my heart near and dear. I don't believe in sitting in front of a computer for 16 hours a day trading. For me, it's about using technology, setting alerts, being able to read charts no matter what it is. I've created programs for Nadex, a 30-minute trader program, as well as the 5-minute binary courses. And these are really meant for traders with full-time jobs, again, not sitting in front of a computer all day. I actually have one of my students actually trades both of these strategies on his phone. So, it is definitely possible. Now, with that being said, the reason I don't sit in front of a computer for 16 hours a day is because I do stay extremely busy. I have twin boys. I coach for them for a couple different teams, and I take care of my daughter at home. She is now 14 months and walks everywhere. She's kind of doing this like sumo walk now. If you guys know what babies look like when they're at that brand new walking stage. So I literally chase her around most of the day. Love doing these things. I love helping traders. Love being in Discord, talking with people about trading. So that's why I do what I do. So that's where my background is, and kind of my breakdown of trades and everything comes from. All right. So before we touch any charts or talk anything like that, I need to go over the Nadex risk disclaimer. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and education purposes only, and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or anywhere else. Now, any trading decisions that you make are solely your responsibility, and past performance is not necessarily indicative of future results. Now, Nadex contracts are based on underlying asset classes, including Forex, which we're going to talk predominantly about today, stock index futures, and commodity futures. Now, trading can be volatile and risk within their investment on any given transaction. However, the design of Nadex contracts ensures that you can't lose more than the cost to enter the transaction. Now, Nadex is subject to U.S. regulatory oversight by the CFTC. Important to understand. I read this every week, but again, I tell you guys, time and time again, one of the things that I love most about Nadex is the fact that you cannot lose more than what it costs you to get into the transaction. You guys will see it. I bring up news. I love news. I love trading news. One of the biggest advantages of Nadex is if I'm completely wrong in my news trades, guess what? Doesn't matter how wrong I am, I can only lose what it cost me to enter the transaction. Okay? And that's one of the biggest things. So speaking about news, let's go into my top 3 news releases. Oops, I forgot to change the date. 12th, there we go. All right, so every week I do a breakdown, and this is kind of my top 3 major news releases. What these are is the kind of 3 biggest opportunities that I see for the week as far as news goes to move the markets, to give us something that's tradable. Doesn't guarantee that they're going to do that, obviously not, but these are the top 3 that I feel that will get there. Now, first one is the Aussie dollar. Once again, I forgot here we go. Hold on, I'll fix that. Bam, there we go, Aussie dollar. All right, so the Aussie dollar that trades at night, you guys will see that is a 9:30 p.m. Eastern Standard Time release. Why I like that one so much is the Aussie is really kind of been bouncing around back and forth, giving us some absolutely amazing trade setups I'd say the last couple months at nighttime. Part of the reason why is during that time when those news releases are happening, that's considered the Asian session. There are not U.S. traders and London traders out there that can counterbalance those trades. Whatever happens from the Aussie, the banks and traders and things like that. So it's one of those areas where you'll get, 40 to 60 pip moves in a very, very short period of time, and then retraces overnight. And the big banks and institutions of London and the United States are nowhere to be involved with it. So absolutely amazing trade setups. If you guys are not looking at these, definitely, look at these Aussie releases at night. That's number one. And employment change is one of those things that's been big, been real big. Employment change from the CAD last week was I think it was our top release, and fireworks, fireworks. Okay. Number two, on Tuesday this week, tomorrow, is the United States CPI. Okay. Anytime you guys see the I and we talk inflation, big deal. Okay. Inflation, this is a consumer price index. This is month over month. So everything that's going on with kind of the trade war and interest rates, the Fed lending rate, those all have to do with, inflation, and this is where it all kind of, comes from. All right. The consumer price index is really kind of a measure of that inflation level. And if we don't see inflation, guess what? They can keep rates low, right? When you start seeing inflation, that's when they start talking about raising rates to kind of curb it. So with everything going on, as you guys know, we had a Fed rate cut of 0.25. The market wasn't necessarily happy with that. It actually, put it this way, I think the market thought we were going to get more, and I think it wanted 0.5. And then all of a sudden, that's where the new round of, attacks on China came from. And with that being said, that was one of the things that the Fed said. If there's a continued effort on the trade war, then yes, we would have to look at cutting again. But this is not the start of the cycle. Well, this didn't take even 24 hours before he attacked China after that one. And again, if we see the inflation not rising at all, it's starting to put more kind of oomph behind that whole, hey, we need another 0.25 because we wanted 0.5. So CPI number, I think, is an important one. We can definitely have some movement. And again, that will send shudders through not only the currency world, but also a lot of the indices on Tuesday morning. Okay, that's going to be the kind of, I think that's what's going to dominate the news in the morning. Going to Thursday, retail sales. Okay, retail sales is a big one, right? If people are not buying, guess what? They think the economy is bad. If people continue to buy, not too bad, right? People are not necessarily concerned, and at the end of the day, it's the spender at home that is what determines where the market's going. So again, not too bad, as far as the week, as far as the quality of these top three. After this, it kind of gets a little bit shy. Okay, so let me go across and we'll pull this. All right, so you guys know that I'll use Daily FX for news. They got a lot of great articles on here. I'm definitely a big fan of it. We're talking about pivot points in the Aussie right here. But go over to charts and calendars, go down to economic calendar, and just a couple small things. Make sure you change this to where you live so it doesn't kind of completely mess you up. I'm in the New York and Toronto one. I'm going to go to filters. I'm going to remove Mexico. I'm going to remove low and leave everything else there, and then hit weekly view. Okay. So you guys will see Monday, really not a whole lot going on, right? We only have two things, a budget and, business confidence. So they're considered mediums, but really nothing, right? Everybody's taking Monday off. It's still the summer. Got to get those last couple weeks in before the kids go back to school. I know my sister's kids actually go back to school this Thursday. They live in Texas. They're one of the early ones. They they get out in May, but man, they go back in the middle of August, and my kids are freaking out because they only got 2 weeks left, or I guess 3 weeks left before they go back. But again, got to get those last vacation weeks in. That's why we don't see news on Mondays now. Tuesday, you guys can see we do have a big block of pound news. Now, pound news is great because, again, the pound has been so weak on so many different levels. It's been in areas where we want to start, seeing some strength come in, but then something happens and bam, it just pops back higher with a little bit more weakness. So anytime that you see, a block of pound news, and again, this is, jobless claims, unemployment change, it is not bad data, right? And again, the pound needs something. The forecasts are typically, low. I mean, they're expecting, you guys can see here, this is the previous category on the right, and then this is the forecast. When you look at this pound news, you can see that the, like unemployment change, unemployment's, the employment change is supposed to be good. They're hiring jobs, right? But then you look at like the unemployment rate and things like this is where you get, average earnings are supposed to be up. So this is technically all good data for the pound. That's what's forecast. Well, if they miss it, guess what's going to happen? Man, it's going to be more pound. I mean, it's just bam. That pound's going to drop even further. Okay, there's going to be more weakness. Again, it's forecast to be positive. The market should be kind of pricing that in, and we'll kind of see what that looks like in a chart in a second. Then again, we're going into some euro, expectations, which is fine. That's actually not bad. I'm happy about that, especially for things like the euro pound setups. And then you guys can see that's where we have that CPI number, the consumer price index. And again, it's year over year as well as some of the month over month data. the average earnings and stuff isn't necessarily a big deal. And then this one right here, the New York Fed to release second quarter household debt and credit report. I'm not really expecting any surprises with that. I don't, it's considered a medium release, but I think CPI and inflation will be the kind of main focus for that morning. It's not like I don't see this being anything too big to worry about. And then you can see we have a whole lot of Chinese data. You have retail sales. Again, these forecasts are, the retail sales year over year is expected to be down, so the market should be pricing that in. And again, we're not trading this currency directly, but you can trade this proxy through the New Zealand dollar or the Aussie dollar, okay? Because they purchase a lot of things from the Aussie. That's where you're going to see these coming from. Going into Wednesday, okay, you can see that there is some GDP data for the euro. Again, that's good data. That was close to being kind of in the top 3. But again, GDP data for Germany. What happens in Germany is basically what happens in, with the euro. Okay, they are the main force, the main, the driving force behind any euro strength or weakness. And you can see that's expected to, be down. Okay, you will also see the CPI data for the pound. Again, that could lead to a kind of a 1-2 punch if you're trading like the euro pound, right? Later in the day, you guys will see that's where we have some of the U.S. data, and then that's where we have the unemployment change and unemployment rate. Now, it's supposed to be on this time. Last time it was actually better than expected. The employment change number as well. Last time, the previous was 0.5. This time they're expecting to be good. So they're expecting that there's hiring, even though we just had some rate cuts over there. So we'll see. I think this could give us some, some nice excitement on, this Wednesday evening. Going into Thursday, you guys can see retail sales number. There's really nothing in the morning. There's a little, sales for, excluding auto fuel. Really nothing in the morning, and then bam, we hit 8:30 a.m. Eastern time, and that's where we hit, all our retail sales, initial jobless claims, continuing claims. So there's a lot of stuff about the economy in here, but the retail sales number month over month, that's the biggie. That's the one that people are targeting. All right. Then we go into manufacturing and things like that. Again, none of this is earth shattering. Again, business inventories, take flows. Some people talk about it, but again, not too much. There is New Zealand manufacturing that night, and then going into Thursday. Friday. Best thing we have is this University of Michigan, sentiment. And again, it's expected to be down, but we'll see. It's at 10 o'clock. This could signal a reversal, but most of the time, Fridays have been dominated by what's happening over the weekend and who said what and who's retaliating to who. That's where the weekends have been at this point. All right, so that's kind of your week at a glance. Let's go over to the platform. Bunch of different things up here. As you guys know, I use this kind of platform for a couple different things, a couple different areas marked off in here. So where we are right now, again, we had this big push right here, this kind of Sunday to Monday, right? This has just been absolutely just on a tear to the downside, meaning that we have Aussie weakness in this trade. And we had a couple of levels and things like that pointed out that we we're looking for. So where we are right now, we are getting into the territory where I would consider this, let me shrink this and make this a little bit easier. Some of these take off just to clean it up a bit. Those two I'll leave. If you guys look back, and this is the daily in the upper left here, okay? It's been a long time since price got down here, okay? This was an area where we were setting up, well, we weren't setting up, but the overall market was setting up what I would call a bear trap, right? The second it hit below this thing shot all the way back up again and tried to take people's stop losses because this is a support resistance trap. Then it grabbed more orders and shot all the way back down again, and it did the same thing. It popped and came all the way back up again here to that level. So we're going down and approaching it a third time, okay, to go even lower. So there's not much below, and again, this you guys can see it over here on the 4-hour. There's not much sitting below this candle, right? Over here. Now, we do have a big push, okay? We do have an extended kind of push to the downside. There's no pullback yet, okay? So I'm expecting some type of a pullback, but I'm not interested in getting short in this until we get an area where I see, a good level of sellers, okay? Right around this red bar or this red line, around the 72.26, there are definitely some orders over here. This is kind of a little hidden area of sellers. That's about the only thing I'm looking for. And again, if we look at our 4-hour to 30-minute, if this pulls up, we will be in a downtrend setup situation where we are looking for an area to go short. Well, that little area is probably right here, okay, for the near term. Okay, so that's what I'm kind of looking for on this pair. As far as the daily, I do think the next time we punch through, I think we will go a little bit lower. Again, between this one and the Aussie dollar, I think the Aussie dollar gives us a little bit clearer of a picture. You can see that this is not necessarily at a low because it has the US dollar involved, not the yen. And this one kind of pushed higher instead of just, it did the same thing. It hit the bear trap and shot higher, but has not followed the same kind of back and forth, tennis ball pattern. All right, so this one had a much slower kind of repop up, and you guys can see on the 4-hour, it kind of took a slow, impulse, a little bit of a correction, an impulse, little correction, impulse, kind of went back and forth. I was actually looking for a trigger up in this area and didn't quite make it. And it kind of just, folded over and kind of slowly kind of just ground its way down. You guys ever seen one of those pictures of the cows just chewing and they're just sitting there just chewing on grass? That's what this reminded me of. Watching this, it just kind of like, just munching back and forth again. So, it is retracing back down again. I'd like for another kind of burst through like this. We'll see when US data comes online if we can get anything. Obviously, today is not like one of those full days. The only thing we have, really, there's really nothing much today that can power this through. That I don't see any big spikes like this that we're looking to take over. So. Right now, let's just see, where it's going to turn when U.S. traders come online. We'll see where they're going to push the dollar, see where they're going to push gold, and see where the reactions are. Looking across, those are your two Aussie pairs. Going across the euro pound, I mentioned multiple times in the news section that we've been in this upper area. Okay, we were bouncing back and forth. It was respecting this top area, and then bam, Friday happened, and we shot all the way up. Had a bit of a gap to the downside, went right back up, and then again, it pushed and rolled over down back into this kind of bottom side of this purple zone here. So this is one of those situations where the pound is just getting more and more and more and more beat up. Again, there's finally European data this week that is forecast to be lower than what it was previously. That may give it. It's not like the euro is a strong region right now. They're just stronger than the pound, and the pound has had a lot of indecision. We got Boris in there. Unfortunately, though, Boris really hasn't said too much that has moved the markets, one way or the other. I think people were expecting a stronger kind of tone from him, and I think he's falling into the situation where it was a lot of talk beforehand to rally the troops, but now that he's inside, now he's actually seeing the difficulties that May had to deal with. So we'll see. But again, nice little pop off of this gap area, came back up, retested, and then continued to collapse away. So. Interesting little setup here for a gap week. Again, where we are now, push lower. There's not really a whole lot of orders till we get down in this area here. That is at 92.25-ish area. And again, that would be the restart of this move right here. This 92.22 area is where I think we're going to push low. It's running into a little bit of a hiccup here, but we have pushed lower. So I do think things will come back down again. I don't really see too much, end in sight to this one. We'll see what happens tomorrow. Like I said, the economic sentiment tomorrow is lower for Germany. That will put some pressure on this European pair, and maybe we can start getting that push back down again. One thing on the daily, again, if you guys see this blue area right here, you guys will see that we have wicks that are stacked up like this. This means that there are buyers supporting this area. So I'm not sure, not having a great feeling about this one, really kind of blowing and pushing all the way back down to these kind of two dotted lines just because of this area, but we'll see what happens when price starts to push down. It's really going to depend on that, the Aussie data, and then later in the week, not the Aussie, the Euro data, and then later in the week, some of that pound data, okay? Going into the Euro Yen. Okay, Euro Yen just kind of broke through an area that we were waiting for it to hit, okay? Down in this blue area, we saw that this was kind of a trap that we were looking for last week. The same thing, the bear trap based off of, kind of previous wicks. So it hit that, it bounced, it went higher. It actually grabbed this little hidden area right here that we were talking about, and then it continued to push down, 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 and has actually gone back and just hit the profit target. So where it is now, and I kind of like this, right? So we saw previous kind of buying in this area right here, okay? We broke through that level. Again, there is definitely buyers here. Again, you guys can see all the little wicks right in here. Move this up, you can see it right here. We hit that area, we have pulled back up and retraced it and then pulled away. Okay, so I like that formation where we break through the level, pull up and to retest. Unfortunately, in the daily and the 4-hour, we are still in that buying zone, but that doesn't mean it can't grind and continue to push through. So that's what I'm kind of looking for right now. If we do kind of break above this prior high, or this, the 117.70, 117.80 area, I do think we're going to have a bit of a retracement back up again, probably back up into 118.30 or about 50 pips higher to where we are. So there are some trading possibilities in that one. Okay, this one is just really kind of overnight and from Friday, it just kind of pushed its way and grind its way lower and retraced the kind of the spike we're looking for. So for those of you who don't know, again, these kind of big spikes, you'll see these kind of big, big jumps in candles and things. A lot of this is generated from news, and it's why I highlight the news every week for not only playing the actual news release itself, but then also playing the retracement. And that's what this is. Okay, again, we don't have that on Monday today because news hasn't happened yet. But this was a retracement back from news on from last week, right? That's where we kind of started these pops from last week. And it's retracing down. So as far as today, not too much of a setup. Later in the week, again, areas I'm looking for, again, I would mark on your charts. This 118.15-ish area on the 30-minute isn't bad. And as far as explosiveness goes on the 4-hour, again, this would be later in the week. It's the 118.85-ish area. So, I mean, I have this kind of trigger right here. I'll move this up actually into that range. 118, let's see. Yeah, 118.80 is where I'd put an alert, or 118.75-ish area. If you guys know how to do this, set it on your platform. You don't have to pay attention to it until it gets up to there, and then you'll know that it's up to an area where we've seen basing and price kind of exploding at the bottom. All right, going across the euro dollar. So, euro dollar. Okay, this thing went up, and I missed entry on it last week. I had this one little area right here. I missed it by what one of my students calls pipettes. Then it really hasn't done much. It's just kind of flatlined, right? It's just kind of, you guys, it's like a heartbeat, right? Boom, 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 and it's getting smaller. And we finally had it burst out, but it pulled right back. So not too much in this one. Again, a lot of sideways play. Would love to retrace this back down again with profit targets down here at 111.20 and 110.70. But right now, there's nothing that's showing me that it's ready to break. Again, this did go lower, which was nice, but then immediately pulled back up again in that area. So you guys can see this is what that looked like. That pulled back down and then kind of a push back up again. So not the explosive movement we like to see. It was bouncing off a level right here, and there's not much below it. So if we do make a concerted push to the downside here, I could be looking, today or tomorrow, looking to go short this pair down, particularly with some of the forecasted euro news for the week. But it is definitely high on what I would consider kind of this ledge right here, and you can see the ledge is starting to kind of grind back down again. Normally, when we see this in the past, you see it here, then you get this pop, kind of push, or this ledge and then pop. That's what ledges do. Again, it's stuck in this little area. You can see it. Look how little these bodies are. Here, 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 and here. 5 days of very, very small movement, very small kind of tiny retraces back and forth. We're waiting for some type of kind of explosive movement in this pair. Okay, so we're preparing for that one. Looking at pound yen. So pound yen has been another one of those pairs, and you guys can see, same situation. We had this kind of basing ledge, right? And then boom, it exploded. Now this one is given 2 different entries this past week, and again, even in kind of this bit of drama over here, it kind of hit the selling area, dropped, went to the bottom of the channel, hit the bottom of the channel again, went up to the top, triggered, kind of went back down again. So it's been kind of even though it is trending sideways, this is one of those pairs that moves enough. Now this was about 100, what is it? About a 200 pip. Again, it looks small. This is 200 pips, and this is 164 pips. So quite a large amount of strike prices. Again, it did take some time, and most of this movement happened in the end here. But again, divide this down. Think about it. If you're taking daily strikes, your strike differentials are 20. Okay, so this is definitely there's definitely movement in here to grab, even though it does look very sideways-ish. Again, I'm kind of spreading it out to get a kind of a full picture on it. So where we are now, we are actually in a downtrend setup situation. We've pushed lower, we're pulling back, we're looking for orders, and it's trying to find some more orders so it can grab them and turn around and sell. So the problem is with Monday mornings is Sunday night. This is kind of the gap candle. This is the gap situation we had. It's reaching for orders, but the only thing that's in reach right now is just this kind of this grind on Friday. This is Friday at 9, 10. There's not a lot to grab typically, right? So I do think it's going to try to pull back a bit more. I think we've kind of stabilized our base here. I'm expecting somewhat of a retracement today, pull back to grab orders, maybe up in this area, maybe up this 128.40 area. There's a little bit of a base here, but nothing super clean. Nothing just reaches out like this and grabs me to say, hey, listen, this is where sellers are right now, and a lot of that has to do with the fact that this is all Friday. Okay, this is what we're dealing with right now. Even on the 4-hour, you guys can see there's really nothing clean until we get back up into this 128.42 area. the same area, this one up here. So again, that's, it's a bit of a move to the top side, but that's, again, looking into the week, I'm kind of looking for some type of a clean entry into that. But again, downtrend setup, just not a lot on the bottom for us to grab. Okay. Looking at pound dollar. Again, I think pound dollar will have some movement this week between U.S. releases as well as the pound releases. You guys can see we were talking about, we were stuck all these little tiny, tiny body candles. Finally got an explosion out the bottom. It was awesome. It went right to the buying area that we've been talking about, which was established way back. God, where do we forget where we put this? We were talking about this last week. This is something we've talked about way back there. There you go. March 2017. That's where this candle came from. And again, we mentioned that was going to be the one kind of threat. If this thing broke out the bottom, that we need to be careful. We have buyers sitting right below it. And you guys can see, not only did it hit, it literally kind of gapped up, dropped back down again, and now it's pushed higher. So this blue area has been really somewhat of a magnet. And again, a lot of times what we're looking for is when we break a zone, look for somewhat of a retrace back into it, and then look for the kind of the falter as it grabs more orders. Now, this one, again, be careful. This is definitely a buying area. It went up. It's trying to grab some orders up here. You guys can see it reaching. It's trying. You guys see it? It's trying. And again, looking on the lower time frame, you guys can see we have kind of this area right here. Okay, that's the area that it's reaching for right now to continue to push to the downside. If you're going to use something like this, I would use somewhat of a target down in this area, right about there. Okay, down at 120.30-ish area. That's what I'm looking for as a short-term target to this one to the downside. Looking at dollar Swiss. So dollar Swiss last week, it's not a pair that I trade too often. It tends to move slow, but man, did it not move slow last week. Okay, we had some movement. Again, we had a bit of an explosion right through a zone. It paused in the zone before it pushed higher. And then what did it do? It went as high as it could, and then gravity set in, and it just dropped down and cracked us right on this target. Since that time, it has kind of bounced back and forth. It's gone higher and lower, and it's really been kind of, I'd say consolidating. You can see the lows are getting higher. I'm sorry. Yes, the highs are getting lower and the lows are getting higher, and we're kind of pushing back into that area. Now, on the 30-minute setup, you guys can see there was definitely a bunch of setups that we were able to take, last week. Where we are now, you're starting to see things get a little funky again because of the weekend. You guys can see, look at all the time that it spent this gold area, all over here, all over here. Again, it bounced off the gold area here before pushing down, and then what did it do? It pulled right back to the gold area. Up again, touch the gold area again, touch the gold area again. So this 97.50 area, again, as 50, anything with 00 or 50 is a psychological level for humans. It loves that 97.50 area. There's something special about that area. And even looking at a short term right now, we're down at this 97.20. It's only about 30 pips. But you'll see, again, we're having higher highs. We're starting the base. We're creating a smaller channel. Okay. I don't use indicators often, but one of the indicators that I will occasionally throw on there that I like a lot is Bollinger Bands. And the reason why is because it's based off statistics. I'm a huge believer in statistics. There's a reason why casinos make tons of money. It's because the odds are always stacked in their favor. And the longer you play, the odds will always work out. But it's interesting when you see spikes like this. You had a spike this far above, then this far below. And then it came back up and reset. And then you had this far above, and it was almost equal to the downside this far to the bottom. You guys see how that's, it's interesting how that works, right? Similar move, similar move, similar move. And then it got smaller and then smaller, okay? So it's interesting how that's working out. And again, it looks like, we had two up and then it down and then up. And now we've had two down. And I'm wondering if we're going to go one back up into this 97.08 area. So it's showing that it looks like it wants to kind of push up there. Again, it did hit that 50 and pull off. We do see buyers down here below. So interesting kind of setup today. Use your own analysis on that one. But again, we got that big move last week, and that was kind of a fun one to ride, as well as all these smaller term, again, two strike price Nadex targets here. Okay. Dollar CAD. All right. So dollar CAD had some interesting moves last week as well. And it had the same kind of trap area that we were talking about. So here, right here, if you guys see this, where my let me see, I'll put an arrow here. Let's see, the arrow. Oh, well, let me draw it. Okay, there's my arrow to the downside. You guys see this candle right there? I just want to make sure that you guys see it. So this was the news release. Okay, this was an example. There's actually a webinar coming up called webinar I'm doing on parabolic retracements. This is exactly what I'm talking about. Okay, this was a news release that we highlighted. This was our number one release from last week. What did it price do? It literally shot all the way up, cracked the target that we were looking for it to hit, right, where we'd be turning around, and then it went all the way back down to the start of the move. So this was a 65 pip run up, 65 pip run down, and then since that time hasn't done much. So this is why news is so important. And you guys can see even on the 4-hour retracement, or, burst up, burst back down again. Now, this is an area, you guys see this green over here? We were talking about this being a target, and we didn't get entry last week because of this, last week because of this kind of back and forth, chiseling sideways, just didn't love it, right? Never left it there, but this was the original target that we were trying to set up on the trade. And you guys can see we made it to about 90% of the way up, even probably, I think it's like 93, 94% of the way up at that box. We got so close, and it got front run and pushed it all the way back down again. So there was definitely some entries down in this, this area down here. You guys can see it on the 4-hour. It was the launching point, and that's what it came and bounced off of. It is now pushed higher. So for this one, obviously, neither of those two markets are open. Look for news and data this week. Anything oil-based, again, you'll see the CAD start kind of bouncing around. Obviously, and all the U.S. data, the dollar will bounce back and forth. And again, CAD has some numbers later this week as well. None of them considered high, but they have some medium releases that will probably move the market. One thing to note, though, if we do get back up at this 132.71 area, I'm personally going to be looking for some shorting opportunities as well when we get there. And again, it's going to depend on the entry. If it does this and just kind of grinds like super slow, and like it doesn't hit till Thursday, not interested. But if we get any type of nice movement up in that area, the way that this area was formed here, okay, I'd be looking to kind of get some shorts in, most likely around that area. Okay, going into a dollar yen. Again, dollar yen is another one of those ones that kind of fell off the cliff off the daily. Again, this one did that exact kind of movement again. It went down, it hit this area, right? It gave us a second entry. It dropped, it came back and retested, and then continued to push through kind of the golden target on the bottom side. That's why we had this golden line. Now, this one also had a wick situation, but a little bit differently. This was the kind of the golden target was based off these two prior drops. This, I'm going to change this because this is not a green. This is not a green kind of guy here. We're going to change this to red, okay? This is an area that I'm definitely watching, okay? This is at 104.80, okay? It's down, yeah, there it is. Take a second. So this 104.80 area, be very cautious with this, and here's why. Every support resistance trader in the world knows that this is the low. So what is every support and resistance trader going to do when it breaks 104.80? They are going to sell, right? And that's what we saw in the other pairs, where they would sell and immediately shot straight in the air. Why? Because every computer, every trading algorithm, every professional trader knows with the support and resistance, the rule says if it goes below here, you sell and you put your stop loss on the other side. So watch price drop in, and it's going to pop right back over to be able to take all those people and all those stop losses out. Okay, this level will play games with you, so be very cautious of it. Okay, now typically you get some type of a base around that area, right? As it's establishing orders. It's not quite basing yet. It's still a little bit far. It's still got about 35 pips before we get to that area. About 35 pips before we get to that area. Likely to see it a little bit closer. It's forming a base level where people will probably start. They'll say, okay, I'm going to put it on the other side, but at base, I'm going to put my stop losses there. So what they're doing now is they're going to probably look for an area to start establishing those stop losses for those support, those support and resistance trades. Now, where I'm looking to get short is if we break through this level and then we pull back, I'm looking for wherever this basing level is to be able to take this short, to continue this to the downside. Okay. About the only thing that's going to stop this, and again, we have some room for this to kind of go. I mean, Japan will eventually step in and say, okay, our currency's too weak, we need to intervene in it. We definitely have space before that's going to happen right now. I mean, it's obviously dropping down. The dollar is getting weaker, and this one it's coming. It's going to the downside, not to the upside. But right now, there's nothing that I'm looking at this and I'm like, hey, the Bank of Japan is going to step in and it's going to launch this. Not quite there yet. So, but definitely be very cautious of this area. Protect yourself with this area because, again, support and resistance traders are going to run into traps when they hit that area. All right. So with that said, guys, that is the end of the charts today. Like I said, thank you for joining us today. I really appreciate you guys coming out. I know it's early for those of you that are watching the replay. Again, really appreciate you guys, tagging in and watching these. We'll definitely be here next week. If you have questions about anything that I talked about today, you're more than welcome to reach out to me, whether it be going to check the website out, checking us out on Instagram. If you guys are on Instagram, go over there and give us a like. I do post trades, trade kind of, I guess, lessons over there. That's all I do. I'm not about, I'm definitely not the watch and Porsche guy. I don't believe in that stuff. But I do post setups over there so you guys can learn how to, kind of start reading price action. You can check us out on Facebook. We do nightly presentations on Twitch as well. Keep trading simple over there if you guys are familiar with what Twitch is. Discord is absolutely free if you guys want to join it, as well as just email me the old-fashioned way. It's funny that I'm saying email old-fashioned way, right? And that's at support@keeptradingsimple.com. So that's it, guys. Thank you so much. Have a great trading week, and I will see you guys next Monday morning. Take care.